Good morning, distinguished guests, partners, and colleagues. Welcome, welcome. Good morning, distinguished guests, partners, colleagues, and participants joining us from Nigeria, Africa, and the global development ecosystem. On behalf of the Agriculture Summit Africa and our partners, Sunbeth Global Concepts, Lagos State Employee Trust Fund, and Lagos State Ministry of Agriculture and Food Systems, I warmly welcome you to today's Thought Leadership webinar commemorating World Water Day. We're glad that you are here with us. Our theme for today is Climate Smart Agriculture, Driving Resilience and Sustainable Agribusiness Growth. We all know that agriculture sits at the heart of Africa's economy, employing millions, contributing to the job market, sustaining livelihoods, and driving food security across the continent. Yet today, the sector stands at a critical intersection. Across Africa, farmers and agribusinesses are facing increasing climate pressures, including unpredictable rainfall patterns, flooding and drought cycles, soil degradation, and rising water scarcity. These are not just environmental challenges as we know them, they are also economic and financial challenges which affect productivity, supply chains, yields, investment decisions, and long-term food security. At the same time, we are witnessing growing opportunities through climate smart agriculture, which we know is a game changer in combating climate issues. We also have innovative financing models and sustainable agribusiness practices. Today's webinar brings together experts from across climate finance, sustainability leadership, and agribusiness ecosystems to explore how we can move from conversation to implementation, and also from ideas to scalable solutions. We are glad to have you participants join us. Please feel free to make use of the question and answer box to interact amongst ourselves and with our panelists and speakers for today. We're glad to have you with us today. To formally open today's section, it's my pleasure to invite a distinguished expert who will deliver the welcome address and help set the context for today's discussion. Dr. Olushoya Obinkoye brings extensive experience in agricultural development, ecosystem partnership, and policy engagement. His work has contributed significantly to advancing conversations around sustainable agriculture, agribusiness development, and climate resilience. Dr. Obinkoye will provide insight into the broader landscape of climate smart agriculture and the opportunities for strengthening resilience across Africa's agricultural systems. Please join me in welcoming Dr. Olushola Obinkoye. We can make use of the chat box to welcome him. You're welcome, sir, Dr. Olushola.
Thank you very much, Ruth. Thank you, everyone. Well, distinguished speakers, colleagues, partners, everyone joining us virtually, good morning, and thank you for taking the time to be here. On behalf of Sterling Bank, it is a pleasure to welcome you to this conversation. We're delighted to host such a diverse and experienced group of stakeholders who are actively shaping the future of agriculture across Africa. Let me begin by especially appreciating our panelists, the work that you are doing across policy, finance, development, agribusiness. These works are deeply impactful, and we are grateful for your contributions to this dialogue. Thank you for all that you do. Now, this conversation is very timely. Across Nigeria and indeed the continent, agriculture is being reshaped by climate realities. We are seeing increasing variability, unpredictable weather patterns, changing growing conditions, rising pressure on our production system, the changing pattern of our national food security system. And the truth is that this is no longer something we can prepare for in the future. It is already here. It is already affecting productivity the way we know it. It's affecting the value chains. Even investment decisions and outcomes are not spared. Which is why I believe that climate smart agriculture is very, very critical. And this conversation is apt at this time. For us, this is not just about sustainability in the traditional sense. It is about building systems that are more resilient, systems that are more productive, and ultimately more viable from an investment standpoint. Because when agriculture becomes more climate resilient, uh, everything else improves. Talk about yield, efficiency, market stability, and even credit performance, which we are very, very reputed for in Sterling Bank. In Sterling Bank, this thinking has been central to us. How are we going to approach agriculture? And more importantly, how are we going to make our agriculture more sustainable? We have made a deliberate shift towards integrating ESG principles into our financing and business decisions in Sterling. We did not do this because compliance requires us to so do, but we see it as a strategic priority for continuity. And this will mean that we are increasingly focused on supporting climate-aligned investments, promoting sustainable agricultural policies and practices, and then working with partners to structure bespoke financing that reflects today's reality. We're also deepening our work in sustainable finance. We are leveraging blended finance, engaging development partners, and even creating solutions that enable scale while we try to manage risk. Beyond financing, Sterling Bank is intentional about ecosystem building, connecting farmers, agribusinesses, and markets, while supporting the adoption of climate smart practices across key value chains. So for us, climate smart agriculture is not a side conversation. This webinar is not just a talk shop. It is central to how we think about the future of food systems and especially food security. About, more importantly, about sustainability. So this webinar, therefore, is really not to just identify the issues or to even bring up ideas. We want to ensure that this seminar throw up ideas that we can then move to execution, actionable suggestions, things that are implementable. It is about sharing what is working. It is about understanding how in climate smart resilience or climate resilience and climate smart agriculture, how we can scale. It is about strengthening the partnerships that are required to make these things happen. So our expectation is very straightforward, that this conversation will lead to practical outcomes that will improve resilience, outcomes that will unlock more investment, and outcomes that will position agriculture as a sustainable and inclusive engine of growth in climate resilience. So I want to thank you again for joining us. I also want to use this opportunity to thank our partners, the LSCTF, and of course, Sunbeth. And I look forward to a very engaging and insightful session. Thank you very much. Over to you, Ruth.
Thank you so much, Dr. Bikonye, for your insightful opening and for setting the tones for today's conversation. One thing you've highlighted is that building resilient agricultural system requires collaboration. And from now, we're going to be looking at the next segment, which is our expert panel discussion. It's important to note that the section today is going to explore practical perspectives on climate risk affecting agriculture, climate smart solutions across the value chain, financing mechanisms required to scale resilience, what are the policy and ecosystem enablers that are currently existing, and we're also going to be looking at investment opportunities and growth outlook. It is my pleasure to introduce our distinguished panelists joining us today. We have Christoph Junkfleisch. Christoph is the founder of Yapu Solutions, which developed one of the world's first operating systems designed for digital resilience and adaptation finance, supporting financial institutions and development partners in scaling climate and nature finance. Please make him feel welcome in the chat box. We also have Onyikonsola Owoyemi. She is the Sustainability Director, Sunbeth Global Concepts Limited. Onyikonsola serves as a pioneer Sustainability Director at Sunbeth Global Concepts, where she leads sustainability and corporate social responsibility initiatives across the cocoa and cashew value chains, advancing responsible sourcing and climate-conscious agribusiness practices. Please make welcome Onyikonsola Owoyemi. We also have with us Olumide Lala. He is the Executive Director and co-founder Climate Transition Limited. Olumide works at the intersection of climate strategy, sustainable investment, and advisory, supporting institutions and governments in navigating the transition towards climate-smart, resilient economies. Please make welcome Olumide Lala. And with us today, we also have Salako Olajumoke. She is a climate change expert with over a decade experience in national climate policy and international climate negotiations. She currently serves as the Assistant Chief Scientist at the National Council on Climate Change, Nigeria, where she is the Debt Officer on Agriculture and Climate Change, with additional responsibility for gender integration. Her work focuses on advancing climate-smart agriculture, adaptation, mitigation strategies, and the implementation of climate policies in Nigeria. Please make welcome Osalako Olajumoke. Thank you all for joining us today. Our panelists, welcome to today's discussion. So let's dive straight into the discussion. And let's start at the foundation, which is understanding the climate risks that are existing. We see that across Nigeria and Africa today, we already know that climate variability is already impacting agricultural productivity and business performance. So my first question would be, what are the most pressing climate risks affecting Nigerian agriculture today? And how are they shaping outcomes across the value chain? How do these risks impact yields, agribusiness profitability, and even credit performance? And the first, Christopher, let me come to you first. From an investment and operational standpoint, what are the risks influencing agribusiness on a global scale, and how are they influencing agribusiness discussions? Christopher, you have the mic.
Thank you very much. And thank you everybody for having me and to share this important webinar with all of you, with fellow panelists. So thanks for having us. Yeah, climate change is accelerating. So I think what is very clear on a global scale is we are not talking about future generations. We are not talking about doing good to the planet. We are talking about economic activities in the now, in the present. And this is specifically true for agriculture. This is even more true for smallholder agriculture, which is a large part of agriculture in Nigeria. Smallholder farmers and the communities that depend on the economic activity, they clearly are the most vulnerable and the most dependent on climate and ecosystem services. So it's a core ingredient to their success. So we need to look at climate risks, and if we look at what type of climate risks, I think you mentioned most of them in a broader manner. So we have rainfall variabilities. We have a large or a high level of uncertainty, unpredictability when it comes to planning of planting and up to harvesting. We have more frequent extreme weather events, floodings and droughts, which impact severely the agricultural production system. We see linked to nature biodiversity, the degradation of soils and declining fertility. And obviously one of the main and key issues, and Nigeria is a large country, is around water stress and water management. But also what we see increasingly, and we see this across the global scale, is you have differing disease and pest patterns which are triggered by climate change. So, but I don't even think that is the main problem or the main challenge. Really, the main challenge, we can measure, we can identify the exposure to specific climate threats. There's more and more data available, satellite data, historical data. We have new AI models that help to understand this data, but the data is there. So the exposure to specific climate threats, we can pin it down pretty accurately, either looking into the past and seeing trends, or looking into the future under different emissions profiles and scenarios. But what we are lacking is structured and finance relevant visibility on these risks. So we are not yet, and I'm speaking globally, I'm not speaking even only Nigeria or only Africa. That's a global problem. We are not good at translating these data into standardized risk metrics that we can use in the banking sector, in the investment sector, in the insurance sector. So we often have a high reliance on historical payment patterns, for example, in the banking sector, but we are not factoring in what might be happening in the future, and we probably need to change our approaches there. When we go away from this general view on the climate risks and look at what does it actually mean, and we are with the same challenge, we need structured data on this, is how does it impact yields, or even in general agricultural profitability, and how does this then translate into financial risks, which obviously will affect credit performance. So yes, this uncertainty and unpredictability leads to unstable production outputs. Might be that you have a good year and you have favorable climate, and you have a very good yield and harvest, and the next year might be totally different, and you lose 80% of your production, which drives then prices in country, but also for export goods, etc., etc. So we have these disruptions in the cropping cycles, and we have a reduced efficiency of inputs. So we need we need to look at, okay, how can we drive adaptation? How can we make the productive systems more resilient? How can this translate in scenarios with climate stress, a more stable production, less losses, honestly? This is really trying to mitigate the impact of adverse effects of climate change. But then under no climate stress scenarios, well, we want to enhance the productivity. And also, and this is the next pillar's discussion, there are ways how we can identify the answers to confront and to fight climate change. And I'm not talking about reducing emissions, having more renewables, or having more energy efficiency. I'm really talking about the big topic, especially for countries like Nigeria, that we need to drive adaptation forward and limit the cash flow volatility, have clear view on what are the payment capacities of farmers, smallholder farmers, and then really look at lowering default risk, which is stemming from climate. But again, it is climate risk today translates directly into portfolio risks for lenders. And the real bottleneck that we have there is actually that we are not good at measuring and monitoring these risks and then learning from this monitoring. So what we need is really standardized data collection frameworks, taxonomy aligned classification of any answer that we have to counter these risks, to make our agricultural production systems more resilient and more effective and more profitable. And then obviously keeping on learning via the implementation of digital MRV systems. So in sum, what we are seeing is not just the risks stemming from climate change, but we have a data and risk transparency challenge. And it's usually not that lenders in general or investors are only reacting to the risk. They are usually reacting and refraining from investing due to a lack of measurable risk. So this is when it comes to the risk side, we really need to do the work, introduce new systems. I think we have all technology, all data available so that we can do so, and we can do so effectively and efficiently, and we can build a clear investment thesis and financing thesis to strengthen capital flows into more resilient agricultural practices.
Thank you so much for those insights, Christoph. And piggybacking on what you have said, some of the challenges you have listed, Olajumoke, I would like to bring you in here. From a policy perspective, how are these issues being addressed? The rainfall variability, flooding, soil degradation, the impact it has on credit performance. We'd like to look at it from a policy perspective. Thank you very much. Olajumoke, please.
Okay, so when we talk about climate risks in Nigeria agriculture, we are no longer talking about projections anymore. These risks are already here. The farmers are dealing with them every single season. And why do these risks matter? Because they combine to reduce yields, they increase our food prices, as we have recently seen, deepen poverty, and then push Nigeria towards food in.
Hello, Jumoke. Can you hear me, please? I think we do have some network challenge over there. So I'll bring in Wayne Consola, particularly from what you're seeing across the value chains. What are the risks that you are seeing, and can provide more insights into some solutions that you are already deploying?
Thank you so much, Ruth. I think that Christoph has done a great job talking about most of the risks that we see, and I really agree. Or like when he talks about the data risk that we're seeing. So one of the key things that I would say that we've seen over the past few years of trying to be more sustainable, working with smallholder farmers, is that for you to do anything meaningful, you need to solve the data problem. And this looks like going to farms, like, partnering more with our local and licensed buying agents, working directly with their farmers, mapping the farms, assessing the farms, understanding, what the pain points are. Because if you don't have that data, you can't really measure whether or not, these farms are performing as they should. So you would find that maybe in previous years, a particular farmer and was able to supply more from a particular farm in comparison to now. And sometimes, farmers are not really thinking as to why that is happening. It's that, maybe they'll say, oh, it rained a lot this year. That is why, maybe yield wasn't as, expected. But you find that, when you start assessing the soil, it's like, the soil is, doing poorly. And so they need time to, allow the soil recover. Again, it goes back to data. And I'd say one of the key things is just, mapping, trying to solve that data issue, working closely with farmers to, also train on, better agricultural practices, right? Or like, or should I say good agricultural practices, which is what we call it. But there's that challenge where farmers are like, you know what, this is how we've been farming for many years. There's nothing new that you really want to bring to the table, but there's actually so much more that you can bring. And it's in working one-on-one with these farmers, having focus groups. And that's how we're able to say, well, look at this focus group in your community. This is what has happened to this person's farm. And that's how they are willing to engage more long term. But again, it takes time. Resolving this issue, it requires time, it requires dedication, and it costs money. So yeah, it's first solving the data issue. I think it's very important. I think that it's very difficult to build climate resilient systems without solving the data issue because you really don't know what you're solving, or it becomes a box ticking exercise where you just want to be compliant, but you're not really solving the problem. So to solve that problem, we need to look at ways to gather more data and then learn from the data that we've gathered and then see ways to improve and starting with different focus groups, which you can then scale up. You can then scale up what you've done in this certain communities. But yeah, that's it from me.
I love your take on using data to drive productivity, but there's also something key you have said, and Christoph has said, is not just gathering data, but using the data to support development and growth. And the other thing you had mentioned about having focus groups, like you said, when people have done things for so long, when you come to provide, some sort of, solution, they're like, I've done this before. But when you have proof of concept, it also helps in adoption. So as we're moving from risk to solution, and which you have started by saying data, focus group, I would like Christoph to come in here and say, what technology can be used to enhance resilience and efficiency across the value chain, right? So we understand that there are risks, but what is the solution? That's why we're all here. What are the technology enhancements available for us? What are what tools can be deployed to enhance? And when we talk about tools, we don't necessarily mean tools that are just for large scale farmers. Tools that even smallholder farmers can use and deploy to build resilience and efficiency across the value chains. Christoph, please.
Yes. No, perfect. And that's honestly, that's exactly the right sequence. We look at the risks, we try to standardize and to understand the risks. We try to document, we try to analyze, we try to learn. But then, yes, the entire question is, okay, now that we understand the risk, what do we do about it? So what we see, what is working in Nigeria, we are just starting out in Nigeria. We started this year early on. We are working on a taxonomy, and I will explain. Taxonomy, you will hear this up and down over the next months and years. Everything will be organized in taxonomy. So this is a key angle. Nigeria is also about to publish their sustainable finance taxonomy. So this is the conceptual framework we need to keep in mind when we talk about solutions. So very concretely, what we see, obviously, water stress is one of the key issues. So irrigation systems, everything around water storage, surface water storage, but also access to groundwater where surface water is maybe reduced. We want to get to a point where we can extend or even put further agricultural seasons depending on the value chain. Then we have soil management. So we need to see that we restore soils, that we maintain them fertile, that we work with solutions like crop rotation, agroforestry systems, which help us to really make use of these ecosystem services. Nature provides us services, so we can make use of these, and we need to strengthen, we need to identify them, we need to measure them, and we need to understand how they are affecting our productivity. I'm talking our agricultural productivity, and how we can take advantage of opportunities. Climate change is not only about risk; it is also about opportunities. It has been for too long. This discussion has been focused on let's do good to the planet, let's protect our future generations. It's all becoming more risky. We need to be careful. Which, if I don't see what is coming, then I, as a lender, as an investor, would also say, well, I'm not investing. But when we look at it, obviously protecting soils, we need to work with climate resilient inputs, so drought resilient or flood resilient seeds, for example. We need to look at post-harvest losses and storage and processing solutions. So we need technologies which help us to create more value, but also maintain value, so that we don't lose 30 or 40% of the harvest due to improper storage. And in the end, obviously, we can have a link to climate change mitigation. So we can work with renewable energies, which give independence, which give a cheap source of energy. For example, you have a lot of solar energy. So if you can capture it, then of course you can use and you can technify the production. So when we look at the increasing effectiveness, it's not only on the production side, it's also on the financial side. So what is lacking, the big data gap, and I'm sorry, obviously I'm biased, but I'm coming back to the data. The big data gap when it comes to the solutions is that we don't understand across all possible solutions what is their impact exactly on different value chains, productivity and profitability. So we need to start understanding much better. Obviously, you have a lot of data for cash crops, but often the more you go into local markets and local production, also local distribution, the less data you usually have. So we need to understand how are specific solutions tied to a specific value chains and a specific farmers' productivity and profitability. And this will then also help to build the business cases. So it is not that we apply climate smart agriculture because it's good or because good practices can do good somewhere. No, I need to know. I invest into a drip irrigation system. I might double or triple my production. Okay, so now let's build a business case. Yeah. So but the reality, at least also from what I can appreciate in the start of our work, is this CSA practice data when it comes to business and investment cases, it's still fragmented. There's a lack of standardization across different players in the system, and it's usually not systematically tracked. So we need to work on this, and that's really like the core question. And for this, you need to identify and clearly define these practices which are applicable in the Nigerian market, which are available. So it's good to know that you have a super solution, but nobody is selling or installing it in the country. Well, then thank you for this recommendation, but I cannot do anything about it. So we need to understand what is available. And at least from our perspective, we are working, and I think we have identified around 130 different solutions, which we see indications that they are being implemented in the country. And one of our next steps will be, hopefully together with all of you, working on a business and investment cases in order to create this basis, which can help us then really to expand and scale the application of solutions which are specifically profitable and effective for the concrete situation of each farmer that is implementing them. And this is a huge, again, data challenge. But again, we can tackle it, and the methodologies for these exist. And this is where we get to the technology. It is not only the adaptation technologies, but it's also about how can we capture as a financial sector. I mean, our focus is on the financial sectors. We're working with banks, with SACCOs, with NGOs that are working in this field. So how can we ensure that we have the right data collection tools, and that we get a view into the portfolios that finance? How can we have real-time monitoring? How can we understand and basically switch from a reactive risk management to a proactive risk management? Meaning, I see there are certain triggers for pests and diseases. I see this for certain value chains which I have in my risk assets, in my loan portfolios, and I can have like a warning to my customers. Yeah, I can share this with producer associations, and yes, I totally agree to the point. It will be a joint effort. We need to make it measurable. We need to measure resilience. We need to make it bankable. We need to make it scalable. We need the data for this. We need transparency. We need to align with international standards. We need to prepare for IFRS S1 and S2. So there is a compliance part of this. So it's a broad topic. The good message, maybe in summary, is solutions are already out there. I think what you will see, and I said this at the beginning of my answer, what you will see is taxonomies. This will be the name of the game over the coming months and years. Will be you will see a living organism of taxonomies, classification systems. So taxonomy comes from biology. It's a classification system of climate solutions for different climate threats and for different value chains in different regions, where you can basically look at, okay, this solution would be now a good one for my client, for my member, for my partner. And here are providers. This is the business case. This is the investment analysis. And this is what this farmer can then expect in terms of benefits by implementing such a solution. So there's more to come, and honestly, really eager to work on this over the coming months and years together. But the challenge is there, the solutions are also. Now it's a question of applying them to the concrete cases. Thank you.
Thank you so much, Christoph. You have spoken about 130 solutions that are available depending on the area, location, product. This is a broad subject. And you also touched on compliance. And I believe we have Jumoke back in the room. Jumoke, you were speaking before your network went off about what is available from a policy point of view on what practices are being promoted nationally from the government, or policies, and that are being promoted and can be scaled. Piggybacking on what Christopher said about compliance and regulate global practices alignment.
Okay, so apologies for the break in transmission for the network. I was saying that from a policy perspective, that Nigeria has made quite an important progress in our national Nigeria climate policy framework, particularly when we talk about the NDCs, the nationally determined contribution, and our national adaptation strategies. This document has increasingly prioritized climate resilience agriculture, water resource management, and land restoration. We have also seen more structured efforts to integrate, climate information into decision making through NIMET, the Nigerian Meteorological Agencies, as well as risk sharing and agricultural financing initiative supported by the central bank through NISAL. So I think going forward, policy must focus more on scaling irrigation. There is, of course, policies on irrigation, but we have to scale it up. We have to strengthen our extension systems, and ultimately, policy must move from paper to practical delivery. And I want to say, saying from the National Council on Climate Change, we are presently building a robust climate data and MRV system. MRV is measuring, reporting, and verification, which I think Christopher has talked a lot about that, and I think it is very, very important. Though we don't have it, but we are building it. And I want to believe before the end of the year, we will have a very sound and a robust climate data and MRV system in Nigeria. Thank you.
Thank you so much, Jumoke, because a lot has been said on how data can be translated even into the knowledge from the data can yield productivity, which could also impact profitability and sustainability of the sector. With respect to the policies that are existing, are they readily available and where can we access them?
Okay, so when we talk about our nationally determined contribution, I think we recently developed the NDC 3.0. It is online. It is an open source. When you Google nationally determined contribution NDC 3.0, it will pop up. You can easily download it. Our national adaptation plan, they are all available online, and it's easy access by everybody.
All right, thank you very much. We appreciate that, Mrs. Jumoke. So now we've spoken about the risk and the solutions that are available and also the policies available that support the agribusinesses with respect to climate smart agriculture. Let's take it a bit further by looking at finance, which is a critical enabler to enable us scale, right? It often determines the success or failure of a business, right? So I'm going to be going to Olumide. How do blended finance, guarantees, insurance mechanisms help reduce risk and unlock investment in agriculture from your perspective?
Thank you very much, Ruth, and thanks for having me. Apologies for the lack of the background. I think technically we're not able to get that working, but we are here nonetheless. The question you ask is interesting, and I want to pivot off what Christoph was saying earlier. He made reference to a number of things which I found rather interesting, which was data and data gathering tools. In my world, we say, in God we trust. Everybody else brings data. At the same time, data has to be appropriate. It has to be available, but more importantly, it has to be the single source of truth, as it were. Because not so rubbish in, rubbish out. It doesn't matter how robust your technology is, you're measuring processes and all that stuff. If your data is fallible, then everything else falls apart, right? So let's fall back before we even start talking about what finance does and where it's needed. It's about definitions. So what's the definition of a small-scale farmer, for instance? A small-scale farmer, if you look at it from the perspective of the European eyes, it's probably one of the largest farmers we have in Nigeria. But at the same time, do we actually have a standardized, even amongst the banking sector and the financiers, do we actually have a standardized definition for what a small-scale farmer is and what they do? Yeah, before you even begin to define or develop the solutions that are required. So if you just look at it from a global perspective, I guess, when you talk about how did we get to blended finance, and the word blended finance yet again has been used in so many ways. I actually moved now towards talking about blended structures, yeah. But blended finance in its true form is literally a combination of public sector, philanthropies, concessional capital, sort of merged and mingled with commercial capital into one structure. The idea being to provide available and affordable financing for projects, especially long-term projects. More importantly, to align the tenor, which typically from financial sectors are usually short, to long-term financial needs of your infrastructure developers or potential agricultural farmers who look more long-term. The problem we seem to have in the short term is that a lot of the risk focus that we tend to spend time analyzing is more short term. What's the risk as of the next harvest? Because as Christoph said, we're mainly dependent on rain fed. So how do we even begin to change that in view of the fact that the impacts of climate change is getting more ferocious and impactful to the farmers. Yeah. From a financial perspective, I want to lend money. The one thing I'm looking at is one, the credibility or credit awareness of the person I'm lending money to. But more importantly, how do I get my money back? Now, if continuously in a neighborhood we're having failures, then I need to be looking at, how do I manage that existential risk, which is now beginning to become more of a certainty rather than a probability. Yeah, we have flooding in certain areas, we have drought in certain areas. What sort of agricultural systems they are now needed in those areas, and what sort of agricultural practices are required to sustain the yields in the face of increased climate change. Yeah. So blended structures itself speaks not just about the finance side. It also talks about the project preparation. Yeah. What are the things that you need to do to prepare a project effectively to be able to connect to finance? Right. So then you now look at the guarantee structures. Ultimately, it's about shifting risk to catalytic capital. Right. So, you talk about first loss, for instance, which will typically come from places like donors or your DFIs and things like that, and then your concession tranche. So as you build your capital stack, you obviously look at your first loss, you look at your concession tranches, and then your technical assistance, as I said, for the project preparation facility. Now, but here's the interesting thing. It is not every single farmer that can access all of this stuff, because some of these tools and solutions require a lot of work. And so it's targeted towards the larger farmers, whilst a lot of the farmers we're actually looking to protect are the smaller ones. Now, there's actually a microfinance bank that I worked with about 3 or 4 years ago out in Adamawa State. I wouldn't mention the name. We don't want to be promoting stuff here. But what they've actually done was quite interesting, because we had this climate finance accelerator program that was sponsored by the FCDO for some time, for some years, some 7 years, from about 2019, I believe, all the way through to 2023, right? And one of the entities that we actually worked with was this microfinance bank. It was specialized in managing and providing funding to small scale farmers. And when we talk about small scale farmers, these were quite small scale farmers, right? It had about 2,000 to 3,000 in their books. And they just not only provide money, they provided technical assistance, they provided education, they provided even helping them to aggregate where they got their seeds from, the standardization of the seed procurement, standardization of, the type of fertilizer that they got, all of that stuff. Now, typically, you would not find a bank doing that. But in order to protect, it's one of this, I love I don't know if you've ever seen the film Jerry Maguire, right? People talk about show me the money. My favorite from that is actually help me help you, right? Now, the banks are helping, the microfinance are helping the farmers to help themselves, if you see what I mean. Because by helping the farmers and educating them on all of these nuances, you protect your money, because then your money becomes a lot safer. You de-risk the project from the beginning. So it's not just about credit. I mean, in terms of credit, you can always transfer that. You can get a guarantee and that's it. But ultimately, if the failure continues, somebody's going to wear the risk and somebody's going to have to pay for it. Ultimately, the money will dry up. So the idea is actually to start from the beginning, prepare the project effectively, right? Ensure that part of the funding goes to TA. Once the farmers are more enabled and they actually understand the environments better, the tools that they use and all of this stuff and the impact of climate change and the data that we're collecting, and it becomes a lot easier to collect data at that point, right? Then you can build the right tools, the right solutions, and apply effectively. That way you're connecting. I guarantee you, when I started doing some analysis on this microfinance bank over the years, the MPL was so low, it was unbelievable. Now, the amount of money they gave out wasn't that much, but their loss, bad loans were next to nothing, because they went beyond just lending. They did all of this stuff that we spoke about in terms of providing. And this is knowledge that the bank itself builds up to then scale up. And what you can then do is, because you aggregate all these farmers together, Yeah, in terms of the outputs that they collectively bring together can be then sold out to a larger entity. And so you're scaling up the process using a blended structure as opposed to just a blended financing model, if that makes any sense.
I love the perspective you're coming from. And there was something you said that's very key, that we can, share the risk, get guarantees, but it gets to a point that the source will dry up. And you're looking at education as a tool to enhancing productivity with smallholders farmers to increase their yield, even ensuring that they are more profitable, and all the financial, everyone benefits from it. The ecosystem benefits from it. I do love that perspective given. Thank you for that insight. And so I'm going to go back to Christoph. I know you had spoken about data, right? I want you to give a practical scenario of how data and digital infrastructure improve confidence for lenders and investors. So we've talked about data, you talked about it, but I want us to zoom in on particular scenarios where that has occurred and the outcomes that were gotten from that scenario.
Yeah, very good. And thank you already, Mr. Olamide, for this introduction, because it put the focus exactly on the right topic. So first, we're not only talking about finance, we are talking about capacities, right? We need to build capacities. And the second part is you can have risk transfer mechanisms and blended financing structures, but you need to reduce the risk itself. It's not only identifying the risk and measuring it, but you need then to start, and this is what I said earlier, we need to identify the solutions that reduce the risks, and we need to standardize it, taxonomies, in order to make it comparable. So just, and the logic is pretty straightforward. If you look at, you have like a given resilience of a farming system, smallholder farming system, larger system, doesn't matter really. In the end, the principles are the same. So you have a given resilience. Now climate change is accelerating, the risk is getting worse. So if you don't adapt, if you don't do adaptation, and if you don't increase your adaptive capacity and your resilience, your losses will still increase because the risk is getting ever more severe. So there are limits to what, for example, risk transfer mechanisms can do. If the risk gets too high, at some point you are not insurable anymore. If the risk increases and you are not adapting, at some point the best blended financing mechanism would not be blended anymore, because it's not a public-private mechanism anymore, but there's so much risk that you need to increase the public part, which we know that public funds are limited. So the big question is really, how do we get to crowding in private investments? How do we get to capital markets focusing on adaptation, on resilience, financing and investment solutions? And I think you have a stellar setup already in place in Nigeria with your domestic capital market. So there are very good examples of how green finance in a broader term can work. So what we now need to do is, again, it's understanding the risk, identifying the risk, measuring the risk, making a transparent view onto the portfolios, not just based on assumptions and approximations and proxies on your portfolio. So I say, well, this value chain has this risk. Let's just say I'm so much exposed to this value chain, so this is my risk in my portfolio. No, we need to go at transaction level. We need to look at what is the risk, what are the solutions already in place, what are investments that are coming on top in order to decrease the risk. And this is obviously where technology comes in, helps us to monitor and helps us to build these taxonomies, which enable to crowd in other investors that can then combine their funding with public investors. So we heard about Nigeria's NDCs and climate change strategies. And I think if I need to summarize it, it's all about investability. And this is where it becomes very exciting, I would say, at national level, because this ambitious focus on investability, which goes hand in hand with all these technological solutions, that's exactly what is needed nowadays. And what we're going to see is more competition between countries for a limited pot of public resources. We all know that public funding, for example, from Europe or from the United States, has been reduced considerably. So we need also to think beyond just the blended financing mechanisms. We need these risk transfer mechanisms. We need market-based risk transfer mechanisms and de-risking mechanisms. But we should also go beyond that, in a sense that let's drive resilience, because this will enable us to have ever better blended financing, concessional financing mechanisms, and obviously then also together with the national development institutions driving this forward so that we can expand using technology to better understand and crowd in private investment, which is much more abundant than limited public investment. Thank you.
Thank you so much, Christoph. I know that there are questions coming in. We will get to your questions. Please be rest assured. Please use the question and answer menu or the chat box. We will get to your questions as we progress. Before I move on to Oyin Consola, I want to speak on something Olumide had mentioned at some point. He had talked about carbon credit. Could you just give a brief highlight on that before we move on to a Consola?
Was that question too?
You, Olumide. Yeah.
Oh, I see. Okay, sorry. Okay, so I think there's a conversation around carbon credits, which I think sometimes people miss. And yet again, it's down to education. People think, God knows the number of people who've reached out to me, oh, we want some credit finance for certain project, without even understanding what climate finance is used for or what green funding is used for. Now, the big thing in the market now is carbon credits. Everybody wants to talk about carbon credits, but they don't actually understand what it is. First things first, I think before we even get to the definition, and I think past conversations, I'm sure Christoph will get to that, but we need to understand what actually generates carbon credits. What type of projects generate carbon credits, and what does carbon credits actually mean, and how are they validated? And what we've got voluntary, we've got compliance, for instance. What does that mean, right? And what are the processes we're going through? What setups or frameworks do we have in country to actually have this done? Are we even prepared for this as a nation? You see, and forgive me, so on a number of occasions, Christoph has mentioned the word taxonomy, right? Rules and frameworks are not our problem in Nigeria. We have enough of that. We've written enough rules. I mean, I've worked with SEC, for instance, on a number of occasions to write rules on green finance and green bonds and sustainable. We've, worked with, I used to work for a company called Climate Bonds Initiative, which is the sole proponent of the Climate Bond Standard, which obviously the first issuance of the green bonds in Nigeria, both at the public sector and Axis Bank were compliant to. So we have rules, yeah? But there's always the two things that pretty much frustrates me and at the same time excites me about Nigeria, right? We like to jump on bandwagons without actually understanding various concepts. That's number one. Secondly, we're not very good at adhering to rules. We don't like rules. When it gets too complex, we want to shy away from it. The truth of the matter is this, yeah? Money is attracted when risk is manageable. Yeah, you're a banker, right? You're not going to give your money to me if you think I'm going to fritter it away. You want to know how your money is going to get managed and how it's going to get returned. Now, when you talk about carbon credits, right? Carbon credits are an aftermath of a project that has been deployed. So effectively, you deploy a project, you show the carbon emissions that have been reduced, right? Yeah, what has been reduced, and then you verify that and get paid for that effort. So it's not something that comes before, it comes after. So first things first, don't talk to me about carbon credits when you have not even developed your projects or even understood how the emissions are going to be reduced, yeah, as a basic start. And you've got to fund this project up front. Yeah, so you need to even go and borrow the money or raise the capital or whatever, whether it's equity, whatever, to be able to do this. And let's face it, these are large-scale projects as well. They're not your mommy and poppy projects, right? It's not, Olumide Lala running some 2-acre piece of land somewhere to do farming for cassava. No. These are large scale projects. So I think we need to park it. Yeah. And this is where I was talking earlier on about definitions and the focus. What is it we're trying to solve for? So if we're looking at small scale farmers, for instance, right? Individual small scale farmers, you will need an aggregator, right? To even aggregate all of this stuff for you to even start talking about where is the data that you're monitoring. So to the point I made earlier on about my microfinance bank earlier that has 2,000 to 3,000 small scale farmers. That's the kind of entity that will set up a monitoring process to capture the carbon that's been reduced or eliminated over a period of time based on the projects that have been executed for them to actually determine, okay, we've now gathered all of this data, we want to get approval for it. Does that make sense? So in all honesty, as much as, I'm sure Christophe will go into the nuances of what carbon credit is, I think if we go back to NCCC, for instance, we need to actually start putting proper frameworks in place and actually having proper conversations at the national level for people to take us seriously, right? And please, there's no point talking about voluntary markets. Yeah, even though last time I had a conversation with somebody, that's where the starting point is. You're going to go through the same rigor for a voluntary market as you would a compliance market. And the value in terms of monetary value of a compliant carbon certified process is much more than a voluntary one. So why would you even want to waste your time doing a voluntary market when you can just put your resources and develop the right mechanisms to be globally certifiable? So let's, if we're going to do a carbon market, let's get serious, right? And let's not waste time with all this voluntary nonsense that we're focusing on. Get the right tools in place, get the right capacity in place, get the right people, right framework, and let the global markets talk to us about how we can actually reduce carbon and get paid for it. That's my position. I don't know. Christos might have a different view.
Thank you so much. When we were talking, you spoke about the NCCC. Jumoke, do you want to come in here with respect to what the policies around this?
And by the way, NCC is your friend, just like the police, right?
Yes, they are. Jumoke is with us today.
Sorry, can you go over the question again? I think I lost the point.
Olumide was talking about carbon credit, and he was emphasizing the level of preparedness required to assess, which is after you execute a project and they do the necessary measurements and checks. So I was checking, he mentioned if there was a framework from the NCC around this. I think we might be having a delay from your end. Okay, so we'll come back. Okay. Okay, so we'll come back to you, Jim. Okay. Well, let's go to a consular. From a sustainability standpoint, how are organizations attracting climate-focused funding?
Things in place. We need a lot of means where he talked about in Nigeria, and I want to say that getting the credit.
Hello. I think we're having a bit of network challenge.
We have a national carbon market framework. Hello?
I can hear you now. I couldn't hear you a bit before. You're talking about the national carbon market framework.
Can you hear me?
I can. Can
you see? Am I still on?
Yes, you are. Please proceed. Okay, I think there's a bit of network challenge, so we don't spend too much time. We'll come back to Jumoke. I had Consul, I don't know if you had the question I directed to you on
Yes,
how. Okay, please proceed. Thank you.
So the question is on how organizations are attracting sustainability focused funding. That's a good question. I mean, I think I can speak for the organization that I work for. I think in terms of funding, I don't think our funding is necessarily is sustainability focused because we attract funding. However, what we do with sustainability, um, like it influences how willing they are to fund to an extent. Now, so there is yeah, I think Christoph's is raising his hand. I think he probably wants to answer this, which I think is better suited to him. But I do think that we're able to reach out to like more organizations now since we have I think our sustainability structure is strong enough. We have data. We have the number of farmers that we work with. Now we work with over 20,000 farmers, right? Smallholder farmers, and we have their data. They can see it. So in terms of like our off-takers as well, they know that if they were to fund any of our projects, right, they can see the information that we have. And so that boosts the confidence, right? And the approach to um our approach to sustainability. So we have our focus areas. We're not doing multiple things at the same time, right? We know that, in a year, within 5 years, this is what we're focusing on. We're focusing on women empowerment, the communities that we source from, improving the livelihood of farmers, bringing just bringing in new initiatives to like the different communities that we source from. And so I think that that has boosted investor confidence in us as an organization. And I think that that has really influenced it over time. So like I said, it's not really sustainability focused investment. So things that are more sustainability focused, it's not really a direct funding to us. It's that we partner with organizations, for example, Trace, we partner with such organizations and then they disburse those kind of funding, but we don't necessarily go for sustainability focused funding at all. So yeah.
Thank you very much, Consola. I know Christoph wanted to add something here. Christoph, you have the floor.
Thank you. Yeah, I want just to react quickly on the carbon credit topic. And I was even hinted that I might add to this. I think, again, for us at least, and for me personally, for over 12 years that I'm working on adaptation and resilience finance, for me, carbon benefits are co-benefits, at least as long as they cannot be monetized. Well, why? Because we are working mostly with smallholder farmers, so carbon credits target a common good. So how can I expect that the smallholder farmer has an individual investment, individual risk in an irrigation system, the buildup of an agroforestry system, permaculture, you name it? It will be an investment into the farm, into 1, 2, 3 acres, 1, 2, 3 hectares. No, and then we are expecting that we're gonna have common benefits, common good benefits. That's not working. That's not how business works. Also not for smallholder farmers. So clearly the focus needs to be on adaptation. Any carbon benefit would be co-benefit. Nice to have, but if I cannot charge for it, well, then that's not my main aim. My main aim is to increase my productivity, have more cash flow, have better education for my kids, have a better living standard, etc. Yeah. So come the carbon credits. So if we have a clear framework, which I understand is now evolving and has been set, then obviously we can include in the taxonomy development, we can include 4 different interventions, also for adaptation. What is the co-benefit in terms of carbon co-benefits? And we can start measuring this. So let's say you have now 1,000 farmers that you're financing for agroforestry, or they have agroforestry systems in place, and we know exactly for their value chains how much additional carbon they are storing in the soil due to this agroforestry system. So there's a benefit, and according to the framework, they can get money for it. Very concretely, for the via the carbon credits. That's the mechanism. What is the challenge there? Again, you need to certify it. It's not sufficient that you say, oh yeah, I'm saving so many tons CO2 equivalent in terms per year per hectare. No, I need to certify it. I need potentially an external certifier that certifies me this investment. And this is where it becomes tricky, especially for smallholder farmers, because you have thousands and even millions in Nigeria, millions of smallholder farming units. And you cannot visit each and every one of them with an expert. So you need mechanisms which are statistically valid, which are accepted by investors, where you have an external certifier that has a spotlight verification module, which you can then extrapolate for an entire portfolio. And then you need intermediaries which can organize all this, aggregate it, and then basically in the name of the farmers trying to get the carbon credit payouts and channel partially at least the more the better to the smallholder farmers. And this brings me this. I would just like to one additional topic on this, because we have Mr. Yusuf who has posed a question to me. Why? How do we reach this in a rather low literacy level in smallholder farming communities? The first approach is really simple language. Very much focused on local language too, but on the literacy level of the target audience. Short information intervention. This can be short videos. This can be technical assistance. This can be field schools to train a group of farmers. So I think also in Nigeria, you have a lot of these methodologies already in place, from what I heard also from my fellow panelists. So there's clearly simplicity. It needs to be focused on the end customers. And then wondering why adaptation is not the key focus. Yes, I'm wondering too. Honestly, why are we still talking about mitigation for smallholder farmers when the biggest headache, the biggest challenge is really, okay, how do we stabilize and increase productivity? Depending on climate services, on ecosystem services, nature services, then obviously we need to build these capacities in order to make this happen. I'm also wondering, saying that why hasn't this been before a topic and just recently coming up? I think it is much more complex. It's so easy. Mitigation, it's one KPI that we need to look at. And this is CO2 equivalent. That's very easy. It's mostly technology. So I have a solar panel or I have an electric car as a collateral. You're not paying me? Well, then I take the car back and then I sell it, and I can limit my exposure, my risk exposure. Meaning I have asset-backed finance in most cases. For adaptation, it's not so straightforward. Sometimes it's just practices. You just need to integrate maybe integrated pest management, for example, integrated nutrient management. So you have a couple of items which are not investments but practices. It's very complex. It's highly context specific. So you need to understand the local situation, and then you need to identify the locally available solutions to this. And this increases really the complexity of the analytical work to be done. So all in all, I think what is changing right now is that we have much better technology available. So we have not only data gathering tools, but we also have like the data management and analytics tools. And this is increasing by the hour. The recently started an emerging AI revolution. This will change the game totally. So the best positioning will be really the institutions that have the best data on their customers, on their smallholder farmers, in order then to build the business case, in order to promote adaptation finance. And then I think we will see the target by the Paris Agreement is 50-50 on a global scale. I think we are 15% of global climate finance, more than 1.3 trillion US dollars is going to adaptation, 85% to mitigation. I think the target is 50-50. I think this is where the opportunity is over the next years. And hopefully adaptation will not be as underfunded as it has been in the past. Thank you that I could make this point.
Thank you so much. Thank you for that insightful point. So it's very clear that financing is not just about capital, it's about education, training, structure, data management, data analysis, and also risk management. I know that we have a number of questions. And before we go to the questions, I just want to drop a quick question for Jumoke. I know her network has been going up and down. Do we have incentives what policy instruments or incentives are currently shaping this space? Do we have, would like to hear more on that from you.
Talking about what has been working, the practices that are successful. First, I would like to talk about improved crop varieties. They are widely adopted, they are effective. Farmers are using early maturing and drought-tolerant seeds. Of course, Nigeria agriculture is rain-fed and it is unpredictable. So we need this variety that simply fits the reality of our growing season and help reduce the risk of total failure. This is really the easiest and the easiest entry point. It is low cost and it has some quick impact. Secondly is, which I would say is a game changer, is the small scale irrigation, water harvesting and supplementary irrigation during dry spells. That has been helping farmers a lot to reduce dependency on rainfall and stabilize yield. And where this is done well, we have seen immediate improvements in productivity and even the possibility of dry season farming. Soil management practices are also practical, even though we don't get enough attention for that. Practicals like mulching, crop rotation, the use of organic manure, reduced tillage has helped reduce soil fertility, retain moisture, and reduce erosion. Of course, these challenges, this particular one, require more knowledge and labor. So those are the few ones and many others that we have seen that are, very, very effective. Thank you. And apologies for my network that has been going up and down. It's really been stressing me.
No problem. Thank you so much for this insight shared. Before we move on to the investment and growth outlook, which will be taken by Lumide, Oyin, could you briefly share how the private sector is aligning with ESG and sustainability expectations?
Sorry. So you've asked about how the private sector is aligned with ESG expectations and whatnot, right? So I can speak from Sunbeth's perspective. So we operate in the commodities trading space with cocoa, cashew, soy, and whatnot. But we also have a logistics company. So a lot of our work, there's a lot of logistics involved in that, and I think that lots of our policies and what we do internally is, how do we reduce carbon emissions, right? So internally, when we look at our operations as well, looking at ways to standardize our operations in a way that is efficient. We have from the cocoa lands, there's the EUDR that you need to comply with, and this is more so like deforestation. But there is I think it's such a vast topic. I'm trying to figure out where to focus, but I think it's looking inwards as an organization and thinking what are the key things that we want to focus on, right? When you're operating out of Nigeria, there are issues with electricity, emissions. Like at some point we assessed, our energy usage, and we realized that, there would be time where, we're running generator for like 72 hours straight, right? In Ondo State, it happens, right? And it's not looking at, okay, renewable energy sources, right? Looking at, hybrid solutions, solar, looking at lots of things that you can do to ensure that, you're reducing your emissions, and now bringing it back to water as well. In terms of like, farming, like, working with, farmers and saying, these are the policies, these are the kind of things that we expect from, the people that supply to us. Now, when you look at the cocoa value chain, there's, we work with LBAs, right? And then the LBAs goes down to brokers, and then from the brokers, it goes down to farmers, right? So being able to distill what you are trying to do across that supply chain is a different topic entirely. I think Olumide mentioned, and he was saying that, Nigerians, we don't like rules. We want to do things the way that we want to do them. So you can go to like, farmer field school, and you say things like, well, we want to ensure that, we're not wasting water, we are they're thinking you're not the one that will tell us what to do, right? But I found that establishing good relationships with your farmers, not just by saying things to them, but them knowing that you care about them, right? So one thing we do is like, doing boreholes in those communities, and then and telling them, we're doing this because of this, because these are our core pillars. These are things that, are important to us, and it's not really from a compliance point of view. I think that when we look at sustainability and aligning with all these ESG rules and whatnot, strictly from a compliance point of view, it's that you can't really get the message across. It has to matter to you as an organization. Like these are things that need to, like, they have to be led by people that these things are important to. Because if you're doing it just from compliance, like even your staff, they're going to be tired, right? And that's what I think happened. Like that's why I find a lot within the sustainability space. It's quite performative, right? Everyone is just speaking English, right? We say this and that, but for me, it's really just simplifying things as much as possible, right? So for us, we want to ensure that, our emissions are lower. So, okay, looking at our LBAs and looking at our sourcing communities, is there a way that, we can have an alignment where we can pick up products from this like maybe plastic product bins, from a community at a particular time so that you can reduce your emissions and things like that. But again, you face challenges on the field because sometimes farmers are like, well, we don't want you to have a warehouse in our community because that means that you as an aggregator, you want to become an LBA. But again, with communication and for them to see that you're actually committed to them as well as committed to what you are trying to achieve, it becomes manageable over time and you're actually able to reach your goals. I don't think that, it's a one size fits all thing. And I think sometimes, with ESG policies and, you see things like, oh, you want to measure, you don't commit more than this threshold of like, but in Nigeria, how do you actually measure things like this? Like, if we're being realistic, like, we are just gauging things and trying to do the best that you can do and ensuring that, you are building systems that will outlast you. So again, I think at least for Sunbeth, it's that, we're looking at solutions from how can we do this thing that is not just for a year or something that we do for a few months and we can no longer do it long term, but communicating why we're doing the things that we're doing again and again and actually building long-standing relationships with the people that get the things done, which is, the LBAs, the brokers, the farmers. But yeah.
Thank you so much. I do like the perspective of not looking at the ESG expectations from a rule or compliance perspective, but as a long-term perspective, ensuring that we leave a world for the next generation and all of that. Thank you so much for that. And so I'll go to Olumide now. Where do you see the biggest ecosystem gaps when exploring an enabling environment? Where are the biggest gaps currently existing?
Interesting question. So I'm probably going to start from where Oyinkan Sala left off, because that's a practical solution she's come up with, or more or less. I listen to her and I hear somebody who's walked the walk, if you will, from a practical perspective. And I'll tell you why. So 10 years ago, when I transited from the capital markets to climate finance and sustainability and all this stuff, when people used to tell me that, look, this just isn't going to work, primarily a petrochemical economy and all of this is just too much noise, blah, blah, blah. The focus obviously at the time was on mitigation, which is what Christoph mentioned earlier, as opposed to adaptation, which is what we needed. And so the argument was always, well, we don't mitigate, we don't create this carbon where we're not polluting. Why is this the problem? And as forgive me if I can just call you Oyi, if that's okay. if there's one thing she said, right, it's about the why, understanding the why. If you come to the table as we did 10 years ago with, this rule of law, you must comply. Yeah, people get tired. But the moment people begin to understand the why are we doing this? What is it we're trying to solve for? Then people could need to understand the what and the why and the how. And interestingly enough, when you understand the why, the what and the how becomes easier to implement because you're then adapting as you go along because you're learning. So my perspective today, 10 years on, is clearly different from what it was 10 years ago in terms of my focus on compliance as opposed to the solutions that we're preferring today. Yeah. So, and if there's one thing that Onyi also mentioned in terms of actually people's perspective or perception of what it is you're trying to do. Yeah. Nobody cares about what you know until they know that you care. That's the bottom line. Yeah. It's just, I don't want to listen to you. What's in it for me? Yeah. The moment I know that you've got my interest at heart, I will listen to you. Right. And that's where the issue comes. When a lot of the funding that we've received, through the DFIs into the banking system has always come with specific condition precedents, certain rules that we must apply to. And so the financiers are focused primarily on adhering to the rules rather than actually why we are lending money in the first place. What is the solutions we're trying to deliver? You know what I mean? When you shift that, then you begin to look at things slightly differently. And I think the question, as an angle, I like to look at it from an anchor aggregator farmer model overview, if you will. Yeah. And that speaks to, okay, where we're trying to do, because Onyi talked about being in the middle somewhere. So effectively, if you look at even some of if we start with the premise that we have a lot of small scale farmers, for you to actually have the impact that you're looking for, whether it's the increase of yields, ability to gather data, you need somebody in the middle. You need somebody to actually start this process. An anchor, typically a processor who would off-take all of this stuff. You talk about a warehouse, for instance. The small-scale farmers can't deliver at scale what we need. So you need an aggregator somewhere. You need somebody who will invest essentially in warehousing, cold storage, logistics. All of this stuff requires funding. Interesting enough, all of this also requires power. So, when we talk about agriculture, if you're not even talking about the power sector and the impact and implications to the agriculture sector, our food security conversation is out of the window. So there's a lot of dependencies that we're even focusing on. You talk about, you can't manage agriculture profitability and yield for so long if you're dependent on generators all day long. Yeah, you're going to run out of business. There's only so much you can store. So even trying to work with the power sector to have mini grids, interconnected mini grids in areas where we can aggregate processors, right? To ensure that even the mini grid guy is getting paid for what he's putting in there. But you've got the aggregated processors of different sorts that the small farmers can then, who are off takers to the small farmers. Then things like your warehousing can be built, your logistics. That way you're beginning to reduce a lot of the wastage within the system, and you increase yield, you increase profitability, and pretty much everybody's happy. Now, then of course you then get to the farmer itself. Once the farmer knows that he's got somebody to offtake to, they're comfortable. If I know that if I grow 100% and where I was losing 50 before or 60 before, now I'm only losing 10, all of a sudden, I can manage my risk a lot better because I've got somebody I can give it to. Yeah, my profitability goes to, my standing with the bank or the financial system goes up because now my NPL is lower. Yeah, my bad debt is going to be low because now I can service. I can now even begin to think about expansion. So it's about looking at it top down and bottom up, right? The focus shouldn't just be on the educating of the farmer and all of that stuff. It's actually the ecosystem. You've got to build the ecosystem from the farm up, but it's going to start from, okay, it's a chicken and egg situation. Where do you start from? Do you start with the building the processing plant, right? And hope that the guy that is going to provide the feed to you is there? Or do you start with aggregating these guys first? You know what I mean? And then, of course, the power sector. I think Mrs. Alako was having issues with her light earlier on, or was it connectivity and all that kind of stuff? It's all part of the process. Yeah, you can gather data all day long, but if you cannot use your own, Christoph talked about online systems, right? It's easy to run online systems in the city, right? But how are you going to gather data and run online systems if you're trying to send drones? But now we have drones, right? Yeah, which, by the way, are being built in Abuja. So we don't even have to import the things anymore. And in terms of cost of financing all of these agricultural assets, a lot of these things we can actually produce locally. Yeah, we can fabricate some of our stuff. So it's not always the case that you have to go out and import stuff, right? Now, if you then move to, obviously, how do you finance all of this stuff, right? It's a lot easier to finance an aggregator than it is to finance a smallholder market farmer, right? Because it's the same piece of work that you're going to do all the monitoring and all the credit analysis and all that stuff for the smaller guys. So if you build a system for the aggregator or in partnership with the aggregator that allows you to gather the data that you're looking for, then reporting becomes a lot easier, especially for your ESG metrics as a financier, right? Then it's a lot easier to actually aggregate all your blending structures to support the fewer, larger entities than the smaller guys, even though it's trickle-down economy, if it's remain. Now, also in terms of tenor, because you're working with longer term and large scale stuff, it's a lot easier to plan forward. So you're not looking at the farmer whose rainfall produce is going to die in a year or 18 months. You're looking at an aggregator who is now 7 to 10 years. It's a lot easier to deploy money. That way you can connect the monies that is required from the farmer to the capital markets, because you're not going to raise capital market. You're not going to go to the capital market for small monies. Yeah. And it's the larger entities that are able to go to the capital market to raise capital, right? It's interesting. If you look at Nigeria, for instance, the last issuance of a green bond was from Access Bank, to my reckoning, as far as I can remember. Yeah. Where are the other banks? They've been getting money from the DFIs, but guess what? Cost of financing in Europe is going up now. That money is no longer cheap. So we need to start looking at internally generated capital. How do you build instruments that the pension funds can invest in, right? That way, your FX conversation disappears, because now it's all locally generated capital for this, right? And so once you have that, you can then begin to deploy more private sector money into agriculture, because you've built instruments that your pension funds can invest in. It's a long-term conversation, right? But if there's one thing, I'm not sure, I think it's Onyekon that said this, or Christoph, it's all about collaboration. We got to think more visionary than transactional. Our problem, as I see it, everybody wants a transaction today. We've come into a situation whereby it's about transactions. It's sad, right? And I'll close with this. I remember having a conversation with an uncle of mine 40 years ago, right? And he said to me, and I think this was 1990, I said, Uncle, what can I invest in Nigeria? He said, anything you can't get your money out in 3 years, don't bother. Sadly, it's still the same concept we're having conversation with today. However, a lot more things have been long-term, thankfully. We're having larger scale farmers that are thinking more long-term. But in order for us to impact the smaller farmers from a financial perspective, and all of this instrument that we spoke about, and increase our food security, increase yield, increase cash flow, and the loan performance for the farmers, so that we can scale up, we need to be able to find ways of actually creating more local funding for the small scale guys. And I think we're getting there. Education, project preparation facilities, all of that stuff. And the government, in terms of incentives, we've thrown a lot of money away in the past. We just need to be a bit more sensible in how we apply and get this money across. It will be my view. But listen, today is better than yesterday. The future is great and bright. And I think with people like Oyi in the room, and the great things that she's done, and Mrs. Salako in NCC, and I'm sure Christoph with his new technology, Nigeria will be a brighter place to live in.
Yeah, and Sterling Bank too. Yeah.
Yeah. Of course. How can I forget my friend Abu and all the great things he's doing? Huh? I shouldn't forget the conveyor of this, right? You guys are doing a fantastic job across board, especially in the energy space.
Thank you very much. Thank you so much. We have so much to discuss. We have over 60 questions here. I know we cannot, that is with 13 already answered. So we're just going to take a few questions. I know our time is fast spent. And I'm going to start with the question. Please, what is the chemical to use to eradicate ants from the soil before planting tomato?
There's no point asking me that question.
All right. So let's go to, I'm excited to join you here. This question goes to Christoph. While I see the focus is on mitigation, how practically is that achievable for local communities with low literacy levels? We all know that they are smallholder farmers. I am from such communities. I was wondering why adaptation is not a focus for our communities, because the impact for climate change is there. People are suffering from it. Is there provision for adaptation finance in your mechanism? And on a global scale, why is adaptation finance largely underfunded? This question is directed towards Christoph.
Yes, I picked it up earlier, but let me just re-emphasize. I think connecting to what was just said is we're talking about the why, the what, and the how. So I think very important is I want to pick up the ESG compliance focus is really it's not about a compliance. It's not about new rules and the focus should be how can we be compliant. The focus should be how can we develop visions which drive the country forward, yeah, and especially the agricultural sector. So it's really all about making clear where are the benefits, the economic and financial benefits for the farming unit when it engages in certain practices, imputes equipment and fixed assets. So when investments happen at this individual scale. And I would like to take up a second point that was said is the domestic power you have, the local capacity. You have everything. There's one question I'm trying to follow. It's a lot of questions. I love that, but I cannot follow it all. Is well, there is, for example, a lot of data available. Yes, I would totally agree. We can understand what is actually beneficial. So we can identify locally available and relevant adaptation and resilience solutions. And we can even, or we have to, because we are talking adaptation. It's very local and context specific. So we have to work with the local and domestic aggregators, funders, the pension fund. Yes, of course, that's usually patient and long-term capital, which needs its returns. It's the pensions. But you can work and you can circumvent certain FX impacts over the financing part. So I would reiterate for the farming communities, they in many cases they know what they're doing. They have a lot of experience. They might sometimes lack access to innovative solutions. If these solutions bring a clear economic and financial benefit and are explained in local language and in simple language, then I think the uptake will be much better. So you need awareness raising, you need capacity building via technical assistance, field schools, trainings, etc. And then you need obviously the capital is there, either domestically, regionally, or even internationally. But then you need standardization and a harmonization of how we look at the data categories, which can back up the claim for sound investment and business cases. So yes, taking this as a starting point, the question by Mr. Yusuf, but then also looking at the broader future, I think, yes, the future is bright. I think you have a huge market there. You have huge opportunities to increase productivity. And the methodologies out there. Now the question is, how can we build up an own asset class, basically, which is standardized and which follows the same rules and terminology at country level, so that at least at country level, but this will be a global issue more and more, you have comparable loan portfolios and investment portfolios, which you can seek then the funding. It's all, in the end, I think the big bottleneck that is being perceived is the access to funding. I'm pretty much convinced that the pipelines are existing. What we see, for example, for credit unions or SACCOs, but also banks, specifically microfinance banks, is especially in agricultural portfolios, usually between 15 and 25% of the portfolio are already destined for adaptation and resilience investments. It is not that that the communities are not adapting. They are already adapting. Maybe not always the best available solutions because they just don't know about them, but they are already doing it. So I think this is what Mr. Olumide said. Yeah, it's about your benefit. It's not about some ESG compliance. It is about your benefit economically and financially. And once this becomes clear and there's a structured approach to it across all value chains, across all different actors, aggregators, multipliers, and everybody basically speaks in the same direction. And you have a competition. I mean, what we want is competition for the best solutions, offering the best solutions to the clients, the smallholder farmers, for example, or farmers in general. I think we're going to see big changes over the coming months and years, and you're gonna see, and especially in Nigeria, how these portfolios will be growing. Because the methodologies are there, and you just need to apply them on a very simple level to understand transaction-based risks and answers, but also at portfolio level in order to structure capital market solutions. So yeah, answering two, three questions in one.
Thank you for doing justice to the question. We're going to just take a few questions because of our time. Please know that we would also share the recording if you registered for this webinar. So you also have access to the recording. So you can also go back and take a listen again and benefit richly from all the insights that have been shared. The next question is, EcoTower has developed full solar-powered, water-efficient hydroponic systems for climate-resilient food production, particularly suited for urban and off-grid environment. As a solution that's already built and tested, what pathway exists for ventures like ours to access funding and institutional support to scale deployment within climate-smart agricultural programs? This question is towards Dr. Olushola. Dr. Olushola, you have the floor. You're currently muted, sir.
Okay. All right. Thank you very much. Sorry, I was actually answering questions in the QA when I realized that we might not have a lot of time. Could you repeat that question quickly so that I can just delve into it?
Okay, the questions around scaling a solution from a finance perspective. I'll go over it. I had left that, so I'll just go over it again. I think you've answered the question because it's no longer on the question and answer box.
Absolutely, so because okay, so essentially what I had told the gentleman is that we are very available. I just wanted to be sure that's the same thing because I was answering about the time you were asking.
Okay.
We're very available to discuss further. We love innovations. We love solutions. And we need to sit down and see how we can scale, especially when we find that it truly will be useful to our shared aspirations. Thank you.
All right. Because of our time, we're going to take final words from our panelists. Some of the questions have been asked will be addressed. We'll send them to our panelists for them to address, and we'll also circulate as some sort of way for us to also get insight on the answers. So I'll be starting with Mr. Olumide. What are your final words? What are the final actionable steps that agribusinesses can take from this webinar series?
Very briefly, I will say this. I think we've talked about data, we've talked about tools and technology and all that stuff. One thing I will say is that yet again, a lot of the risk that we talk about is actually perception as opposed to reality. A lot of work is being done within the system, but I will advise my word to farmers, especially the smaller end, because you need to, the solutions, there's no single solution from all farmers. The solutions for the small scale is different from middle scale farmers and large scale farmers. But if I were to focus on the small scale farmers, in terms of how do you protect yourself, obviously there are capabilities and capacity opportunities that you need to be aware of across the board. Coming into cooperatives is another way of fortifying your position, at least in terms of having access to the type of seedlings you need, fertilizer, even buying in bulk through cooperatives reduces your cost of acquisition of certain things. Trying to even learn from others in terms of what sort of equipment they use, what sort of data, what sort of tools they use to, and what are some of the solutions that they are available to others that are being used in terms of protecting themselves against climate change. One thing is this: climate change, the impacts of climate change is real. It's not going anywhere. For too long, we've talked about we're least polluters, we don't get enough funding, blah, 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 all that kind of conversation. I think that's all past tense. The reality is that we're the ones who's losing our crops. We're the ones whose businesses going out of business. So ultimately, we need to educate ourselves in terms of what is available out there, what policies, our policies are changing, and how these policies impact us, what the opportunities these policies have for us. Yeah. And more importantly, listen, Sterling Bank has a lot of clients, right? They should be your friends. Yeah. They need to understand what it is that is available to the banking system. And I will employ also the bankers to provide more information, more training, and more capacity building opportunities to farmers. It's not just about, money on the table and your interests that you collect. It's in your interest to ensure that these guys survive, and there's plenty of opportunities out there. So generally, I think collaboratively, I think there's plenty of work for all of us to do, and we're always here to assist. Thank you.
Thank you so much for those insights. Please, there's a link on the chat box. Please, you can give your feedback, and if you have further questions, that link was dropped in the chat box. Please, you can fill the form, put your feedback, and if you have questions, we would also get back to you after this session. 30 seconds, or you can give us your final words.
Well, thank you so much for this session. I thought it was so insightful. I think let me mention everything. Really, collaboration is the best thing, and also looking out for information. I think just being proactive about finding information as well. I find that sometimes Nigerians were waiting for someone to give us the information, but checking online, reaching out to people in the industry as well. I'm very big on messaging people on LinkedIn. They may not respond, but message or find another person. Right, just being proactive. I do think that there's a lot of opportunities out there, and in working collaboratively, and also seeking out information, we can make a lot of progress. So yeah, thank you once again.
Thank you so much. We appreciate that. We'll go over to Salako. Mr. Jumoke, please give your final words.
Okay, quickly, I would want to talk about the disparity between mitigation and adaptation. We all know that before now, a lot of the finance coming from the international space is basically for mitigation, because quickly, in a matter of 1 year, you can measure, you can calculate the amount of emission that was reduced. So quite a number of this international funding goes into mitigation. And that is why it seems as if we do not really prioritize adaptation. We know that adaptation, we should prioritize adaptation more. And now that we have said we have this money is not coming the way it used to be, we have to look inward. We have to, look nationally, source for fund in order for us to prioritize adaptation. Yeah, that is it.
Thank you so much. And now we'll hand over to our chief host, Dr. Lushola, for your final words. I think, sorry, sir. Let's have Christoph first, then you round up. Yes, Christoph, please.
Okay, 30 seconds. I think we are right now, I'm just looking at the present, not in the past, not in the future. Right now, we are at the point where we need to build the infrastructure that helps us to connect agricultural production to capital markets. And we need to do this at scale. So I think we can define proactively climate risks, we can measure them, we can close the data gap. We can organize and harmonize what we understand in terms of methodologies, but also terminology as CSA practices and their impact on resilience and adaptive capacity. By introducing the right digital MRV systems and verifying the alignment with taxonomies, we can make these projects and investments bankable. And then we can automate and we can build a structure for structured finance with blended aspects, obviously, and risk transfer mechanisms that can ultimately funnel and channel much more funding into climate resilient, climate smart agriculture. So that's the moment right now, the infrastructure, the data will be growing. And I would like to come back on a positive note. I think the future is bright. I think this is probably my heartfelt quote for today's meeting. The future is bright and we can take advantage of opportunities. Thank you very much.
Thank you so much. And Dr. Shola, please.
All right. Thank you very much, Ruth. For brevity of time, I think I'm going to make my remarks and then perhaps a vote of thanks, and then you can go on to wrap up. I'll take it off from Christoph. Thank you so much for the positive notes you have given to us. The future is bright. The trajectory is positive, and we know that we will quickly move in the direction that we all desire to be. Again, Olumide, thank you for those very hugely insightful yet local insights that you've been able to bring to the table. I think this is just it reverberates so really for us all. Onyekasola, well done for what you and the marvelous team in Sunbeth, what you folks are doing. Thank you for your input. And then Jumi, that's Jumoke Salako, thank you for your time. Don't mind the network glitches. I am certain that those people that would have time to listen to the recordings again will be able to tie everything you're trying to bring together. But we got we got the bulk of what you're trying to say. And thanks so much. But what I am going away with here is, yes, there's the need for data aggregation. There's a need for capacity building, especially on the side of the financiers, and again, on the side of the other value chain players. The financiers will need to recognize regulation not as an inhibitor, but perhaps what you would call a tailor, something that would help you to be able to get the perfect fit of what we are trying to see. So I want to say a big thank you. But what stands out very clearly for me is climate smart agriculture, climate resilience is no longer optional. It is a pathway to resilience, a pathway to productivity. We need to understand that if we want sustainable growth, food security, we just need to tackle this issue. And importantly, it is also the pathway to unlocking sustainable finance and long-term investment. On the Q&A, we have seen quite a number of introductions in the chat boxes. Please, we're going to harness or harvest all of the names, all of the introductions. We will do our utmost best to look at the product offering you have, for those of you that are talking about your products that pan very well to with what we're trying to do. And of course, those people that have requirements. At Starling, we remain firmly committed to this journey, the climate smart agriculture, climate resilience journey. We will continue to integrate sustainability, ESG principles into how we finance agriculture. We will continue to support climate smart practices across the value chain. And we will continue to work with our esteemed partners, YAPU, development institutions, policymakers, and even the private sector to structure solutions that are practical, that are scalable, and that are impactful. Because the reality is there is no single institution that can do this alone. It requires strong collaboration. Collaboration is the new competition. It requires shared commitment. It requires a clear focus of execution. So as we close, my encouragement to us is simple. Let us take today's insights beyond this conversation. On our part in Sterling, we are aggregating all of the questions. We are taking you on every question that we have seen or any inquiry, every inquiry that we have seen, and we are translating them into actions within our institutions, within our partnerships, not just us, and across the ecosystems that we influence. Please let us remain intentional about building an agricultural system that is not just productive, but resilient and sustainable, not just for Nigeria, but for Africa. I'm not sure how many African countries are represented. At least Christoph stands one leg in Nigeria and one leg elsewhere. So it's Nigerian pretty much. But we need to remain intentional. The opportunity before us is significant. So is the responsibility that we need to undertake. So on behalf of our management, I need to assure you that Sterling Bank stands ready to continue playing its part alongside with all of our partners. I thank all of our participants, those who asked those very wonderful questions, those who listened in. And of course, I want to thank my amiable moderator for a job well done. Ruth, you are the bomb. Well done. Over to you as you wrap up. Thank you, everyone.
Thank you so much, Dr. Ye. We are very grateful for all the insights shared by our expert panel. The recording will be shared with you. If you registered for this, if you also have questions that have not been answered, you can reach out to us on info@agric-summit.org. We're available to answer your questions and queries. Thank you so much to our distinguished speakers and panelists for your valuable insights. We acknowledge our partners, Sunbeth Global Concepts, Lagos State Employee Trust Fund, and the Lagos State Ministry of Agriculture and Food Systems, Sterling Bank, and we would be having quarterly webinars, and hopefully we see you in the next one. Thank you so much, everyone, and have a wonderful day. Thank you very much.
Thank you. Bye.
Thank you so much.
Thank you. Thank you, everyone. Thanks, technology. You did so well.
Have a good day.
Thanks.
Great job, guys.
Thanks to Ruth as well. Thanks for the invitation.
Thank you, everyone.
Thank you. Bye-bye.
Bye. Bye.
Bye.